Bitcoin is right now repeating one of the most legendary mega moves of all time. And this pattern is so jaw-dropping that you are guaranteed to get sent back in time to experience puberty all over again. It is Bitcoin preparing for another drop to complete a game-changing explosion to this exact target. And for the last 14 days, Bitcoin has been trapped within this descending channel. But you know what they say. If you want to make an omelet, sometimes you have to lay your own human eggs. I'm your host, Danny Dumpathon, and on this channel we put the rip in dip and the rash in crash. Holy guacamole, do we have a bunch of new interesting patterns shaping up right now. And guys, honestly, there is one pattern, one chart specifically, that I am just itching to show you guys. Absolutely amazing, and there's just so much going on. And it kind of gives us a little bit of a clue, a little bit of a taste about what we should be expecting this new week. Because last week was one of the craziest weeks most of you have probably lived through. If you've only been in crypto for a couple of months, heck, even if you've been in crypto for a few years, that was one of the wildest swings. But now, what comes next in some of these patterns will literally change your life. Absolutely alerts. And without any further ado, let's jump on in. So before we absolutely knock your socks off with some charts, let's start with this, guys. Bitcoin is officially a new asset class, says Goldman Sachs. Bitcoin is now considered an investable asset. It has its own idiosyncratic risk, partly because it's still relatively new and going through an adoption phase, said Matthew McDermott, Goldman Sachs global head of digital assets, in a new piece of research. And it doesn't behave as one would intuitively expect relative to other assets, given the analogy to digital gold. To date, it's tended to be more aligned with risk-on assets, but clients and beyond are largely treating it as a new asset class, which is notable. It's not often that we get to witness the emergence of a new, absolutely groundbreaking asset class. And the funniest thing about all of this is that we didn't get this news as Bitcoin was teeter-tottering, as it looked kind of bearish, and as it was absolutely plummeting through the Earth's crust. No, guys. When did we get this news? The Monday after one of the craziest dump episodes we've ever seen. Now, why do you think that is, guys? Do you think there is a chance, as we've seen potentially before, do you think there's a chance that the price was dumped and the whales bought the dip, they bought the panic, they bought the fear, and they loaded up on Bitcoin and other cryptocurrency assets at much lower prices than they could have gotten a month ago? Okay, just food for thought. Do you think it's a possibility that potentially big players with lots of money bought cryptocurrencies on this latest dip, as many retail investors were shaken out with fear, uncertainty, and doubt? And as well, volatility is often decried as a bad thing, but it's actually completely natural. Most markets artificially suppress volatility through central interference. And the reason I'm talking about this, guys, is because if you want massive gains, if you want exciting portfolio action, like most people that get into crypto want, you need the volatility. You need these massive crashes so you can get the massive pumps. You cannot have a pump without a dump, and you can't have a dump without a pump. So guys, what we've seen with this drop so far is exactly something we've seen before. Now let me zoom out and kind of just put this on the screen here for you. Take a look at this price action right here, okay? Pretty wild. It looks as though I almost copy and pasted this with a bar pattern. Let me actually just do it real quick, okay? It looks as though I just did something like this and put it on top of it, right? Okay, it looks like I just did that. But guess what? It's not that. This is not a copy and paste of that pattern. This is actually a copy and paste of the March crash back in 2020. Now, what are some key things you know, or key things to note right away? You see, I mean, this the drop was incredibly identical in terms of like the structure of how it broke down. And look at this. This is the most important part. We have the initial low, okay? We kind of rebound. We have a reaction bounce. And then what do you see? Another higher low, just like this. Okay. Now, I'm not saying that, again, this would be way too predictable, but all I'm saying is this is just insanely similar and exactly what a rebound after finding a bottom looks like. And that's all I've been saying for days now. All I've been saying is this looks like a bottom. And when you put it with this, you know, literally taking the bar pattern from, you know what, let me just actually, instead of just talking about it, I'll just do it on the camera. Okay, so here we go. Let's take out the bar pattern, take it from here to here, just copy it out, and then we'll just drag it over to, oh boy. We'll take it over to this, right? Look at this. Absolutely insane. Now, obviously, it's not going to fit perfectly, but I mean, look at this. You have this kind of just trending downwards, then a very steep drop, then what do you see? You see we get this low, and then we get a bounce, and then a higher low. And then, back in March, what happened was we kind of evened out. And really, if you just transpose that on here, this would be a pitch perfect recovery. This would be absolutely beautiful. Now, could something be this predictable? I don't think so necessarily, but my point of showing you this is, so far everything we've seen is just not anything out of the ordinary. And if you would have to find a similar pattern in the past to what this looks more like than anything else, is exactly what happened back in March. Now, keep in mind, what happened back in March was kind of like a black swan event, but I would argue everything leading up to this drop was kind of a unique event as well. We had a lot of different factors. We had the most FUD that we've seen pushed into Bitcoin in the last 3 years, okay, since 2017, 2018. We had the most FUD consolidated into like a 2 to 3 day period, along with Elon Musk with over 50 million Twitter followers. Okay, we had a bunch of different FUD. We had Elon, everyone basically putting all of their weight behind trying to bring Bitcoin down. And realistically, that kind of can create some sort of like artificial black swan event or something like that. So realistically, what we saw, I do think Bitcoin was probably going to keep dropping, but the combination of all of the FUD, all of the massive fear just pumped into the market, literally hooked up to an IV and just pumped into this market is what happened. I think that caused the price to get a little crazier. Obviously, leverage shorts getting liquidated, or leverage longs getting liquidated, obviously, made this drop quicker and everything. But that's kind of my point. There are a lot of different factors that led to this drop being quite dramatic, that led to this drop being quite low. And that's where we find ourselves now, below the 21 weekly weekly moving average. But here is something absolutely critical as well, because what we have potentially forming here, this is the initial crash down to about 30K, even like the 29 on some exchanges. I believe even like the $28,000 range on some exchanges. What we see is a potential neckline with a very clear resistance right around like 38,000, which is basically where we're at right now, between 38 and 40,000, this kind of pretty big neckline. We have a low, which is a potential left shoulder, then a head. And what I could see happening is here another rejection, because we should expect volatility. Just because Bitcoin is above $38,000 right now doesn't mean that it's going to stay above $38,000 from here on out and won't go any lower. It could easily go lower than where it's at right now and still be a bullish recovery uptrend beginning, right? Just because price goes up and down a little bit doesn't mean that a bullish recovery is not possible. But what I'm going to be watching for is a potential another rejection here and a drop down to holding somewhere around $33,000 roughly. And again, what that would initiate is a bullish bounce here, recovery bounce, which really honestly happens pretty often during an uptrend, when we get then a reversal to a downtrend and then we have to reverse back to an uptrend. Inverse head and shoulders is something that actually kind of play out fairly often. It happened very significantly back in like September, October of 2020, and I remember it broke out amazingly. But yeah, it's just a pattern. Inverse head and shoulders are actually a pretty reliable pattern, but I just think it's something to be watching here. And the breakout target is actually right around 47 to 48,000 US dollars, right about within this range, between these two fettuccine levels up here. Like right in this area here, if we got a full breakout here. And again, that wouldn't happen for at least a few days if this pattern actually plays out. But also what that would do is put us back above the 21 weekly moving average, which would be right about here. This is about 48,000 US dollars. And I think a lot of people agree that over the next week, 1 to 2 weeks max, we really, really, really need to get back above this 21-week moving average if we want to be bullish, okay? If we want this bull trend to remain intact, we desperately need to get back above this. And yeah, this is just a pattern that I think makes sense, that could easily push us above there. But what it requires is another drop in the meantime, okay? And what would happen in the meantime? Say that did happen, okay? Let's say we do get rejected here. Do you know what we're going to be seeing in the comments? Do you know what we're going to see people tweeting? The retail investors who have been in crypto for 2 or 3 months, do you know what they're going to be tweeting? They're going to be saying, oh, look, it definitely was a dead cat bounce. Oh, look, we're going back to 25,000. We're going back to 20,000. We're going back to 15,000. Okay, that's what the climate would be like. That is what the fear would be like. Because the fear, I think, is going to still be pretty elevated until we get back above this 21-week moving average, okay? So I just think the market environment is still really shaky right now. Not a lot of people are very confident. I can say that for sure. There are people that are bullish. There are people that are bearish. But I don't think bulls are insanely confident, and I don't think bears are insanely confident, okay? And again, that's kind of the sentiment that you see when trying to put in a bottom like we're trying to do right now. Again, it's still very early on, but this is, again, this is where opportunity lies. But basically, you know, say we get this drop down, say we drop another $6,000 over the next day. It's going to be mega bearish. But again, that would be a potential amazing setup for a inverse head and shoulders breakout. And as well, if we go to the 6-hour chart, because I was on the 1-hour chart, so that's playing out, you know, ideally that would play out over the next few days. But then we have this, and this has been going on for about 2 weeks now. And this is just a descending channel that Bitcoin has been stuck in. We've been kind of bouncing around. But as you can see, as of today, this is our very first touch above this channel. And what else? These are our very first wicks above the 21 moving average on this 6-hour chart, this blue line. As you can see, this blue line is pretty much 100% confluent with this level of resistance. It's pretty much, I mean, you can see this white line and then you see the blue 21 moving average. They're basically like the same. There's a little bit of a difference, obviously, because one's a straight line and one's a moving average. But yeah, you can see this is our very first wicks above this. So this is really trying to get above this. I could see this being a fake out. I could see us getting pushed back down, finding support. But again, this is just something we want to watch because ultimately we break back above this and we hold that. And then more in particular, if we can actually get above 42,000, which is a clear level of resistance and support as well, then we can get more long-term bullish, okay? 42 and 43 is just going to be a very big level as well. And like I've been saying ever since May 19th when we got this drop, it's going to be a battle. If this is truly a bullish recovery, and if we did find the bottom right here on May 19th, it's going to still be a battle. It's going to be unpleasant. There's going to be drops along the way, and it's going to be volatile along the way. But ultimately, Bitcoin is on a mission right now to reclaim so much that it's lost. And with that being said, a lot of altcoins are actually bouncing back very strongly today. Ethereum, ADA are doing pretty good. I think Matic's up like over 100% today. Yeah, I mean, look at this bounce. Holy moly. I wish I would have got into this earlier. But luckily, I do have a bag that I got in a few weeks ago. But yeah, look at that bounce. Very nice. And as a whole, again, I mean, this chart illustrates it very well. There's a lot of room that needs to be made up. I mean, on the 21-week moving average, that's what we're testing right now for the entire cryptocurrency space. We are down to $1.5 trillion. We basically shed $1 trillion in market value in the last week, which is absolutely, I mean, that's very big. So again, that makes sense because not only are people fearful, the fear and greed index is at a 10, okay? 1 to 100 scale, it's at a 10. That is extreme fear. Just like 2 weeks ago, it was like 70 for like greed or something. So people are very fearful and people are very doubtful. And a lot of people are saying that this is a dead cat bounce, okay? But the thing about a dead cat bounce is it looks very similar to a recovery. Whoa, so if you guys new to the channel, make sure you like, subscribe, turn on notifications, and miss absolutely time-sensitive alerts. And without any further ado, that's it for me. Bye-bye.